Hello, this is Mijun from Mijoran University. Let's start today's Mijun news for August 29th. Welcome to Mijun, where we continue to uphold the fundamentals of United States stock investing as always. It's already the last broadcast of August. Since today is Friday, we'll be taking a break from broadcasting for the next 2 days. So today is also the last United States stock market day of August. Anyway, I hope that on this last trading day, the United States stock market shows strength and wraps up August 2025 on a positive note. While I was reading the comments left by our valuable subscribers today, I thought, this comment is really important. I wanted to read it together with you and share some thoughts on the response, because a comment like this was posted. Let me introduce this comment to you all, and let's take some time to think about the response together. This is a comment left by Mr. Park Jae-woo. Hello, I've been getting a lot of good information through the membership subscription. Thank you. Thank you as always. The reason I'm asking is because as expectations for Nvidia's networking sector grow, I started to think that companies like Credo and Astera Labs might be negatively affected. Since Nvidia already has a high market share in data centers, wouldn't expanding into networking also negatively impact those two companies? That's the question you left, and I have to say it's a very high-level question. I've also taken this opportunity to think about it a lot. Yesterday on the broadcast, when I shared NVIDIA's earnings with you, I mentioned that the revenue from the networking sector, which started about a year and a half ago, has almost doubled. So I told you that NVIDIA really seems to be trying to do everything on its own, and that it's even expanding its market share in networking. If that happens, it's good news for NVIDIA shareholders. Costs could go down, and there could be additional revenue in this field as well. Now, we're not only investing in NVIDIA, but there are also many companies with strengths in networking among our top picks. Especially Credo and Astera Labs are companies that focus solely on this area. So in today's broadcast, I've analyzed and organized my thoughts on how these two companies might be affected. So I'd like to start by explaining this part. Well, first of all, I think that's a very sharp analysis. What about concerns over how NVIDIA's networking business might affect connectivity solution specialists like Credo and Astera Labs? I think that's a reasonable argument that could definitely be raised in the market. Well, to get straight to the point, in the short term, it could be a threat, but in the long run, because of the explosive growth of the artificial intelligence market, it's more likely that this will create a relationship of coexistence and competition, providing new opportunities for both companies. Therefore, since the market is growing so much, NVIDIA can't take everything. That's my basic thought. Let me explain this in more detail from two perspectives. First of all, let's look at how powerful NVIDIA is and, as a result, how the threats are increasing. Let's also take a look at some of the negative aspects. The main point is that NVIDIA's strategy recently changed. They used to just sell GPUs, but now they're adopting a full-stack approach by making and selling everything themselves. You can see that they're strengthening this kind of dominance. So now NVIDIA isn't just selling GPUs anymore. They're selling not only GPUs, but also switches, cables, and software, all bundled together as one optimized package. Now, the good thing about selling everything as a package like this is you can make sure that everything communicates with each other in the best way possible. Bundling products from the same subsidiary often outperforms mixing products from different companies. That's why, from the customer's perspective, there's a good chance they'll prefer these kinds of packages. Especially with rack-level systems like Gigabyte, 200 Gigabyte, 300 and MVL, 72 that Nvidia has been pushing recently. I explained what this means yesterday. The reason for the 72 is that it's a single large rack system made by combining 72 GPUs. That's how I explained it. Then, in order to build a rack like this, you need networking, right? So NVIDIA, as networking technology, is called NVLink. It uses InfiniBand. Since this is built in, there's little room for other companies' solutions. That's how you should see it. NVIDIA uses its proprietary NVLink technology for ultra-fast connections in GPU clusters. One thing we need to remember here is that this area was not originally the market for Credo or Astera Labs. I'll explain this part in more detail later. And another thing, you've probably heard a lot about Open Standard Ethernet from Nvidia, right? In the Ethernet field as well, they're not just selling switches, but are pushing the Spectrum X platform optimized for artificial intelligence workloads. And this is designed to deliver the best performance when combined with Nvidia's GPU software. Thus, customers will likely be encouraged to select Nvidia's Ethernet solution if available. Because of this, their market share is expanding right now, and their sales have nearly doubled compared to last year. But even so, from my perspective, I think the other two companies, Credo and Astera Labs, which we're concerned about right now, can also grow. Let me explain the reason for that. First, we need to look at the entire market. The artificial intelligence data center growth driven by Nvidia is such a massive wave in itself. So it's not just a market that's growing a little bit. Artificial intelligence is showing explosive growth right now. Therefore, the more Nvidia's GPUs are sold, the faster the scale of artificial intelligence data centers grows exponentially. Now, when that happens, the total amount of data traffic inside the data center can increase explosively. As a result, this can directly lead to increased demand for high-speed connection components such as active electrical cables and retimers made by Credo and Astera Labs. So to put it simply, my personal opinion is that it's not that Nvidia is taking the whole pie, but rather that the pie itself, the entire ecosystem, is growing so much that there's no need to worry. Now, if you look here, I've written a subheading called The Need for Scale Out. So what this means is that Nvidia now uses NVLink to build its internal network, as I mentioned earlier. But what about NVLink? It handles the GPU cluster's internal connections. Here it's labeled as scale up in English. It means grouping together as many as 72 GPUs, so you're increasing the scale. But just increasing the scale isn't enough, right? You need external communication to connect all these clusters that have been created, as well as to connect to storage and other servers. Internal connections can be handled by NVLink, but for external connections, Nvidia is still a bit lacking on its own. That's how you should see it. Therefore, for this external communication, in other words, scale out, most of the time standard Ethernet is used. The larger the data center gets, the more important this scale out networking becomes. And this area is exactly the main market for Credo and Astera Labs. So the NVLink I explained earlier is for internal connectivity. And when it comes to external connectivity, the companies with the main strengths are Credo Technology and Astera Labs. That's how you can summarize it. So the key point here is that technical expertise and roles are somewhat divided. Credo and Astera Labs are not companies that make switch chipsets that directly compete with Nvidia. In the case of Credo, they are a leader in two fields: digital signal processing technology that prevents signal loss in ultra-high-speed communication, and AEC, which utilizes this technology. Therefore, as Nvidia racks become more densely packed and more GPUs are combined, the demand for AEC, which efficiently connects short distances, can actually increase. It can be resolved positively. And what about Astera Labs? There was a live broadcast for members that I shared on my YouTube channel 2 weeks ago, and I explained it in detail there. It's a lecture on server internal interfaces like PCLE and Compute Express Link, and also on retimers for Ethernet. What about retimers? It's an essential component that cleanly reconstructs distorted signals over long cables. And finally, there's one more point to mention. Amazon, Google, and Microsoft, these huge cloud companies, really dislike being technologically dependent on Nvidia. So from their perspective, they're developing their own artificial intelligence chips, and in data center networking, they're continuing to expand the open standard, Ethernet. And if this huge Ethernet market exists, in the end, it's highly likely that the roles of both companies will continue. You can see it as the pie growing much bigger. So in conclusion, what about Nvidia's move to expand into networking? There are many pressures on small and medium networking companies like Credo Technology and Astera Labs. However, despite that, the overall artificial intelligence infrastructure and capital expenditures are increasing rapidly. Therefore, since the market itself is growing so much, I believe that these small companies can still have growth opportunities together with ecosystems like Advanced Micro Devices and Intel. I'll wrap it up here. Now today as well, I'll summarize yesterday's United States stock market conditions. If you look at the S&P 500 map, yesterday was mixed. About half went up and about half is shown in red. There's something interesting. Because yesterday, all the positive sectors were semiconductors and tech stocks, so the upward trend was especially noticeable among tech stocks. So what that means is there was a big catalyst yesterday. In other words, after Nvidia's earnings were announced, the market saw an upward trend mainly among tech stocks due to the impact of Nvidia's earnings announcement. That's how we can sum it up. But the problem is, thanks to Nvidia, tech stocks did well, but Nvidia itself is actually down. It doesn't really make sense, right? But if we take a closer look, after Nvidia announced its earnings, its stock price plunged more than 3% because data center revenue wasn't as high as expected. And then after the market opened, it recovered more than 2%, right? So during the market session, Nvidia also surged more than 2%. And thanks to that, the other tech stocks grew together as well. It's reasonable to see it that way. Now, if you actually look at the movement of the major indexes yesterday, the Nasdaq had its best performance in a while, climbing 0.63% in one day. Tech stocks' success made the S&P 500 the second best performer, 0.35%. Third, microcaps were up, 0.20%. And lastly, small caps were the only ones to show a minus at 0.19%. So we can interpret it as tech stocks now dominating the market atmosphere, overtaking the microcaps that had been leading recently. In fact, if you look at the performance of the 11 sectors that make up the S&P 500, it's the same story. Yesterday, technology stocks clearly stood out, rising by 0.79% and showing the best performance. So while tech stocks showed such a positive trend, you might be wondering why small cap stocks were in the negative yesterday. Yesterday, there was some really good news, but small cap stocks didn't take it as positively. That's one way to interpret it. I reported this as breaking news about 12 hours ago. The second quarter gross domestic product growth rate was announced. I explained this once before, but what about the United States gross domestic product growth rate? It's announced a total of 3 times. The first preliminary figure, then the second revised figure, and finally the final figure. Yesterday, the second revision was released. Now the gross domestic product growth rate was revised up to as much as 3%. Originally, it was 3.0. So if you look here, the United States second quarter gross domestic product growth rate soared from the preliminary figure of 3.0, which was the first announcement, all the way up to 3.3. A gross domestic product growth rate of 3.3 is a very high level. So actually, it's closer to a boom. Some people are worried that the United States economy will shrink or that a recession might come. A rate of 3.3 means that, in a way, the United States economy is enjoying a boom right now. It's a figure that can be seen that way. Since the market expected only 3.1, it greatly exceeded expectations. Now, when economic growth is this strong, one problem arises. And what is that? Previously, at least 2 interest rate cuts were expected this year, but now there's little need to lower rates much. Why do we reduce interest rates? We lower interest rates because inflation is calming down and the economy might slow down a bit. But if the economy is this hot, the possibility of an interest rate cut could decrease a bit. That's why yesterday small cap stocks couldn't gain momentum. You can see it that way. Therefore, it's correct to say that yesterday's market was led by Nvidia. Now let's take a look at the market breadth yesterday. In fact, the market breadth actually narrowed a bit. Yesterday, it was 65, then dropped to 64 and 21. Stocks with a solid long-term trend are at 64%, which I personally find reasonable. It's not too hot, but it's not like the downward trend is getting worse either. So there are still a lot of stocks showing a positive trend, almost close to 65%. And my interpretation is that it's very positive that this trend continues to be maintained. This time, it's the volatility index. The volatility index has dropped further. It's 14.4. The 201 moving average is 19.09, but the current value is much lower, illustrating the Goldilocks phenomenon. This is how to interpret the volatility index. The fear and greed index rose slightly as market sentiment increased yesterday. Tech stocks surged due to Nvidia, so it rose from 62 to 66. Nevertheless, since it's still fluctuating in this range and hasn't reached the extreme greed level yet, I don't think we need to interpret it negatively. Choice market score rose to 89, but the situation remains unchanged. As I've always said, maintaining a similar level should be interpreted positively rather than negatively. Especially when it reaches the greed stage and stays there without moving, I want to interpret that as a positive sign. Lastly, these are the results of the American Association of Individual Investors survey. In my opinion, this survey result is the most important because the message I've been repeating to you over the past few weeks is this. Right now, looking at the American Association of Individual Investors survey results, the proportion of investors with negative opinions was too high. The ratio stayed high, 43%, then 46% the next week, and 44% after that. But according to the survey conducted on August 27th, it has now dropped below 40%. So we can see from the trend over the past 2 weeks that the proportion of investors with negative opinions in the market is gradually decreasing. And on the other hand, the United States stock market will be up after 6 months. The proportion of people with a positive outlook was 29.9% 2 weeks ago, 30.8% last week, and finally rose to 34.6% this week. So why do these percentages keep changing in a positive direction? Originally, there were concerns that if Trump imposed tariffs, the United States economy would collapse. As you saw yesterday with the 3.3, it's being confirmed once again that the economy is holding up just fine. And there were also concerns that inflation would soar due to the tariffs, but that too turned out to be just a rumor. We're not really seeing inflation surge, are we? So more and more people are starting to think, maybe I was wrong, I should buy stocks now, even if it's late. Nevertheless, if you compare it to the historical average for the United States stock market is 37.5% positive and 31% negative. So, normally, only 31% of people participating in the market expect stock prices to fall, but right now it's 39.4%, which is relatively high. Now, what this means is, this isn't a message telling you to buy stocks right now. Currently, stock prices are continuously hitting all-time highs. Even yesterday, the S&P 500 surpassed its all-time high. Now, despite all this, even though stock prices keep rising and valuations are soaring, right now, there's still too much negative sentiment left in the market to start reducing your positions. In fact, there are more negative opinions than positive ones, which means there are still many people who have sold their stocks and are holding cash. Therefore, my assessment is that as this cash gradually flows back into the market, there is still a possibility that stock prices could rise. Now we'll review the median topics performance. After a long wait, artificial intelligence beneficiary stocks have surged. Yesterday, I mentioned that the stock market went up thanks to Nvidia. In fact, we can see from the median topics performance that it was a market led by artificial intelligence beneficiary stocks. First of all, at the very top is Credo Technology, the artificial intelligence networking group. Credo, which is responsible for networking in artificial intelligence, surged by 7.41%. The second one is the same. Astera Labs, which also provides networking for artificial intelligence, also surged by 5%. Third, Celestica was up 5.06%, First Solar up 3.03%, Broadcom up 2.80%, Alphabet up 2.01%, Talon Energy up 1.76%, Vistra up 1.08%, Palantir up 0.89%, Advanced Micro Devices up 0.87%, and Meta rose 0.50%, all closing in positive territory. 7 stocks fell slightly, and yesterday the stocks that dropped did so only a little. B2 was down 0.15%, Coinbase down 0.16%, Taiwan Semiconductor Manufacturing Company down 0.43%, Nvidia down 0.79%, and Bitcoin is at 111,000. Strategy is down 0.94%, and Tesla is at 0.04%. So I'll sum it up by saying that even the stocks that fell yesterday didn't take much of a hit. Now, let's move on to today's main article. Following yesterday, I think we need to talk about Nvidia in detail again today. Those of you who watched the broadcast yesterday might remember that when I shared Nvidia's earnings results with you, Nvidia was showing a downward trend of more than 3%. So in the broadcast, I mentioned that if Nvidia were to drop further, there was actually no problem with Nvidia's earnings, so the fundamentals hadn't changed. I told you that you should take it as a buying opportunity, that a chance to buy the stock was coming. But unfortunately, as we just saw, Nvidia's stock price suddenly surged and the buying opportunity disappeared. So let's take a look at why Nvidia's stock price suddenly turned upward like this. So, after I finished the broadcast yesterday, various experts on Wall Street also expressed their opinions, and there was a lot of very positive feedback about Nvidia's earnings. Let's take a closer look. After Nvidia's latest earnings announcement, major securities analysts on Wall Street have been raising their target prices one after another and giving positive evaluations. Nvidia beat market expectations in its second quarter earnings on Wednesday. For example, adjusted earnings per share came in at $1.05 and revenue reached $46.74 billion. The consensus was only $1.01 for earnings per share and $46 billion for revenue. So, they announced strong results that far exceeded what the market had expected. And another thing, the guidance for the second and third quarters also exceeded consensus, showing strong performance. However, data center sales missed market expectations for the second straight quarter. The stock price fell about 1.9% before the market opened and dropped over 3% at one point. However, despite this, major institutions like John Pierpont Morgan, Citi, and Jefferies still raised their target prices and maintained an optimistic outlook. I think it would be good to hear what each institution has to say. First, this is Hanran Seo from John Pierpont Morgan. I think Nvidia is still performing well in every area. They are expressing the opinion that the data center sector is expected to grow strongly as major cloud companies continue to adopt GPU-accelerated deep learning to process large-scale data sets. Recently, many people say that Nvidia looks promising because of inference. But what they're saying here is that deep learning still has a long way to go. They're giving a positive assessment now. Goldman Sachs also believes there is significant upside potential as we head toward 2026. They predict stock prices will keep rising significantly. Nvidia's stock has already climbed over 35% this year. And as you all know, last year the stock price more than doubled. So Nvidia stock has shown tremendous growth for 3 consecutive years. That's how you should see it. Currently, the overall evaluation from analysts is overwhelmingly positive. There are as many as 65 analysts covering Nvidia right now. Among them, 21 are not just recommending a buy but a strong buy. And 37 of them have given a buy rating, while the remaining 6 are not recommending a sell but rather a hold. That's how you can see it. Now let's take a look at what analysts from different institutions are saying. First, Jefferies maintained its buy rating and raised its target price by $5. It was $200 originally, but now it's $205. Demand signals remain strong, indicating continued overflow. Hopper and Blackwell products are sold out and can't be sold because they're out of stock. That's what they're saying again. Since the Blackwell Ultra shipments are proceeding smoothly, concerns about the supply chain are also easing. Therefore, demand keeps rising without stopping, and now supply is important, but concerns about the supply chain are gradually easing as well. So, it means that next year, earnings per share can exceed $7. Right now, the expected earnings per share for this year is just over $4, but next year it will surpass $7. That's an incredible outlook. And for 2027, they're saying, there's a possibility it could exceed $8. Now, if $8 is possible, we can estimate the target stock price based on the price to earnings ratio. If the price to earnings ratio is 30, then 8 times 30 is 240. So the price could go up to $240. So that means by next year, NVIDIA's stock price could reach $240 since stock prices usually reflect about a year ahead. We can be optimistic and think that $240 is possible. Next, John Pierpont Morgan expressed their opinion and maintained their overweight rating. They increased their target price by up to $45. The reason is this: their strong performance and guidance along with ongoing artificial intelligence infrastructure growth, ensure Nvidia remains the top beneficiary. This means that among what I shared with you on yesterday's broadcast, Jensen Huang said something similar. What about companies' artificial intelligence infrastructure investments? Until 2030, he suggested an incredible figure, saying it could rise from $3 trillion to $4 trillion. And one more thing, he said that Nvidia could take about 60% to 70% of these various expenditures. Therefore, the current market size is growing tremendously, and the biggest beneficiary of that will be Nvidia. That's what we're discussing now. Next is Bernstein. They still have their outperform buy rating. They raised their target price by as much as $40, so they set a target price of $225. Due to uncertainties related to the Chinese market, the data center guidance is a bit conservative. However, they say the fundamentals are still solid because Blackwell product shipments are expected to accelerate significantly next quarter. I explained this part to you yesterday as well. Nvidia has cycles. Because when a new architecture comes out, the stock price tends to drop quite a bit at that time. Because when a new product comes out, the previous products don't sell well. There are a lot of people waiting for the new one. Now that Blackwell product shipments are rapidly increasing, sales can grow exponentially, leading to another acceleration. Wouldn't you agree that's a reasonable interpretation? Next is Truist's opinion. They maintain their buy rating as it is. They raised their target price by $18 and are now suggesting $228. We focus more on management's long-term outlook. The Vera Rubin chipset will launch in 2026 with 50% growth expected next year, and artificial intelligence infrastructure investment planned through 2030. Total addressable market means the total market size. Jensen Huang suggested that it could reach $3 to $4 trillion, presenting this incredible rosy future. This is the main point, and you should invest accordingly. That's how we interpret these opinions. Now next is Goldman Sachs. They kept a buy rating with a $200 target price. By 2026, due to non-traditional customer demand and increased investment from hyperscalers, earnings per share is expected to be more than 10% higher than market expectations. So, we call the market's outlook the consensus, and since it's for 2026, for more than a year from now, results are expected to be announced at least 10% higher than the market consensus. That's a positive outlook. And the reason for that is, up until now, GPUs have sold well because of increased investment from hyperscalers. Now, demand will come from both traditional and new, non-traditional customers. That's how we can see it. Next is Citi. They maintained their buy rating and raised the target price by $20 to $210. Even without China, data center sales can still grow significantly. They increased their earnings per share forecasts for 2025 and 2026, showing earning power of about $7 per share for 2026, which is next year. Now, if you look here, the target price is $210. Citi's opinion is that the stock could reach $210 in about a year from now. How did they come up with that? They claim the company can make $7 per share in 2026. That means if you multiply 7 by 30, you get 210. So, Nvidia can get a price-to-earnings ratio of about 30 times. Therefore, if it only gets 30 times with an earnings per share of $7 per share, the target price comes out to $210. That's how we can infer the calculation. Next is Loop Capital. They keep a buy rating and set the target price at $250. By 2028, demand for artificial intelligence accelerators, including hyperscale artificial intelligence factories, could reach about $2 trillion. Jensen Huang mentioned that by 2030, it could reach $3 trillion or even $4 trillion. But Loop Capital is saying that $2 trillion is possible by 2028. If the market grows this much, they're suggesting a rosy future where Nvidia's market cap could reach as high as $6 trillion. Next is KeyBank. They are maintaining their overweight rating. They raised their target price from $215 to $230. Nvidia remains the top beneficiary of artificial intelligence machine learning data center growth. They believe that the entry barrier created by the Compute Unified Device Architecture software ecosystem limits competitive risks, so Nvidia is likely to maintain its dominant position in the long term. It seems almost certain that the size of the market will continue to grow. But it's not enough for the market to grow. They also need to keep their market share, and their economic moat helps them do that. Because they're building a software ecosystem, their moat is strong. If the market grows, they can keep their share and speed up revenue growth. That's the logic here. Next is Banco Obu America. They kept a buy rating and raised the target price from $220 to $235. Nvidia will maintain over 80% market share in the artificial intelligence infrastructure market and over 45% free cash flow margin. While the China factor persists, sales elsewhere will offset it. I mentioned that yesterday as well. In a way, China is just a bonus. Therefore, China isn't even included in the current guidance, right? So the current guidance completely ignores China. And even with that, the guidance has actually been revised upward. NVIDIA can achieve significant growth even without sales in China. Entering the Chinese market would just be a bonus. That's the way to look at it. Next is Morgan Stanley, which kept its overweight rating. They raised their target price from $206 to $210. They said quarterly sales would rise by over $7 billion excluding China. This is really great. So in conclusion, we can see that supply is still insufficient compared to actual demand. Most Wall Street investment institutions viewed Nvidia's earnings results positively. Therefore, Nvidia's stock price, which was on a downward trend yesterday, has turned upward. So in a way, for those of us who were hoping to buy the dip, it seems like the opportunity slipped away again this time. I'll wrap it up on a positive note. What's the last segment we've prepared for today? Today's United States stock video lets you listen to content like consumer news and business channel news from the United States dubbed in Korean. The main person in today's video is Jim Cramer. He's a veteran investor. Personally, I don't really like Jim Cramer's style that much. His showmanship is a bit too much for something that's supposed to be an investment-related video. But he's also a veteran investor who's been through a lot. Especially since he went through the dot-com bubble, he compares the dot-com bubble to the current artificial intelligence bubble. He's giving us a really good message about what kind of mindset we investors should have when stock prices are hitting all-time highs every day. I think it's worth watching, so I'm sharing it with you as a dubbed video. I hope many of you will watch it until the end. That's all for today's broadcast. I sincerely thank everyone who stayed with us until the end. And just like that, August has come to an end. Honestly, August 2025 was really tough. Since I moved from a faraway country like the United Kingdom to Malaysia and Southeast Asia, I had to take about 2 weeks off from streaming. And on top of that, I was busy running the membership program, so it was really hectic. But now I've settled into this 2-week process. Starting next month, I'll be able to provide higher quality content, and I'll also improve the quality of my streams. I'll do my best to be as helpful as possible for your investments. I hope you spend a comfortable and precious time with your family this coming weekend. I'll greet you again next Monday. Let's all keep fighting together until the day we can retire through investing in United States stocks. Have a happy day. Thank you.
High expectations for artificial intelligence won't crush our hope. Many investors are abandoning the idea of machines replacing human labor or talking to people. Could excessive expectations have inflated artificial intelligence company stock prices beyond real value? Have market expectations grown so high they're now impossible to meet or exceed? How do we respond? Stock prices have already risen by 35% this year. It's reasonable to say that this was the situation when the earnings were announced. Expectations were too high. To put it more bluntly, the growth rate is slowing down, and it could mean that the $4 trillion empire may not be as solid as people think. The quarterly results were good, but not decisive enough to resolve the artificial intelligence market's biggest mystery. The question is, are companies really getting their money's worth when they buy Nvidia products? China also still remains another challenge for Nvidia. This massive spending has pushed Nvidia's market capitalization to a record $4.4 trillion, and it's possible that this could be the peak. So I'd like to explain why I still think Nvidia is worth it, even though the earnings were not well received by the market. Even though many people may think this is just some kind of magical toy created by a few high-tech scammers to fool the world. Let me briefly address the negative sentiment following Nvidia's earnings announcement. I'm sure you're all familiar with this. The younger generation often describes this as being similar to the dot-com bubble. In the late 1990s, we discovered that we could connect computers to phone lines. The phone lines made rather ridiculous sounds, and as a result, they brought up something called a website on the screen. Some people recognized its value back then. As someone who could be called an internet pioneer, I suggested putting the entire Wall Street Journal online at that time. They laughed at me and kicked me out, so I tried it myself. That was Discreetcom. At that time, no one really knew what they were doing. People were pouring in large sums, but in the 1990s, they recklessly invested $99 or $199 at a time. I raised funds from venture capitalists and invested about $75 million over several years while working. The result was astonishing. Once listed, the company was valued at $1 billion. It was a bubble. The stock price quickly fell to $2, and around 330 companies later experienced the same thing. At least we survived, while most other companies went bankrupt and only a few made it. Losses remain much clearer in people's memories. Fiber optic companies that built the internet's infrastructure suffered the biggest losses. This is the point where it overlaps with Nvidia. The second largest losses were from search engine companies, followed by telephone companies. Many companies collapsed. So what didn't collapse? It was Amazon, Cisco, and Google. Google avoided bankruptcy then because it wasn't publicly traded. These companies joined Intel, Microsoft, and Apple, the winners of the PC revolution. We never saw the other companies' names again. The losses were shocking, but the surviving winners were remarkable. The smartest executives ran them and seized every opportunity. They grew and generated significant wealth for shareholders. I heard similar things. Those companies are part of the bubble. When it bursts, they'll eventually collapse. They said it was only a matter of time. But as time went by, nothing happened. Of course, Intel and Cisco didn't grow explosively like other companies. Cisco remained strong, and Intel survived due to support from President Trump. Now we're hearing this kind of story again. It's about hyperscalers, companies spending heavily and paying Nvidia huge sums, who are now being called part of the artificial intelligence bubble. It was just like the year 2000. Microsoft was like Microsoft in 2000, and Amazon was like Amazon in 2000. Google, like Oracle, struggled with the internet revolution. But for Google, the main issue was data centers. Even Tesla didn't exist back then, but now it's joined the trend and is writing huge checks. And that's being considered a mistake. This quarter's results showed exactly that. Is it really the right thing to pour money into accelerated computing and generative artificial intelligence chips? This is just like when many companies helped build the internet's foundation in the past. Some wonder if the surge of money into Nvidia has peaked and is now slowly fading. First, hyperscalers are run by some of the smartest people on the planet. Second, they have stronger financial statements than any other country in the world. On top of that, they're showing an amazing level of revenue growth. Among these giant companies, the only one that doesn't write huge checks to Nvidia is Apple. And that's because Apple doesn't have a clear artificial intelligence strategy yet. This may explain why Apple's stock has lagged other big tech firms. Will things change after Nvidia's earnings report? Maybe Apple will have the last laugh. On the other hand, all the other companies might end up hanging their heads. Is Nvidia deceiving everyone, or is Jensen Huang deceiving everyone? Is the current valuation overly inflated? The same things were said about the companies that survived the dot-com bubble at the turn of the millennium. Those of us who supported those stocks were called clowns. I myself was mocked as a legendary clown on Wall Street. When I came up with the absurd idea of IPing, people laughed at me and drove me out again. Of course, I definitely want to thank Babraying, who helped me at that time. He's from the street. Ironically, I hear this from people much younger than me who say they've heard it all before. These companies are delusional, and so are the CEOs, and the investors who buy their stocks are the same. Nvidia is central to the biggest bubble ever and is itself key to a huge fraud. The current valuation is just like Cisco's in 2000 when it was at $550 billion. In fact, Cisco was overvalued back then, and now it's worth less than half of that. But I don't really care much about the sky-high market caps of these companies. I'm simply trying to evaluate the value of companies that are making essential products to become true players in the field of artificial intelligence. I've already learned long ago not to doubt major customers like Amazon, Microsoft, Google, Meta, and even Tesla. People much smarter than me are leading the company. I'm just grateful to be able to be part of that journey. It's fine to call artificial intelligence a bubble. The important thing is that those who invested with faith during the 3 or 4 years of the dot-com bubble ended up gaining tremendous wealth. Of course, there were moments when they had to realize their profits along the way, but even when the dot-com bubble burst, some managed to rebound strongly as winners. You had to have the courage to buy. If you gave up on Amazon in 2001, you missed out on a $2 trillion opportunity today. If you give up on Nvidia now, I think you're not abandoning a sinking ship, but missing out on one that's only pausing and will recover. The conclusion is simple. Don't trade, just hold.
The start of frequent dreams is important. Be a little greedy and grow bit by bit every day. Enjoy today's journey. I'm not afraid, even if a dark dawn comes. Thank you for retiring with American stocks.